What if I told you that the global financial landscape as we know it just shifted irrevocably while you were sleeping? That the pillars of the Forex market, long dominated by a select few currencies, have just been fundamentally shaken to their core? This is not a drill, and this is not speculation for a distant future. As of today, the world has witnessed a seismic event that financial historians will look back on as a true turning point. The Iraqi Dinar and the Vietnamese Dong have officially, and without any prior warning from the major financial institutions that typically control these narratives, gone live on the global Forex market. Let that sink in for a moment. The gates have been opened. The two currencies that have been the subject of the most intense speculation, the most fervent hope, and the most cynical dismissal for over a decade are now trading openly on the international stage. This isn't a rumor on a forum, this isn't an unsubstantiated tweet from an anonymous source. This is a live, verifiable, and earth-shattering reality. If you are holding the Iraqi Dinar, if you have been following the story of the Vietnamese Dong, your moment of truth is not on the horizon, it is happening right now, as we speak. The anticipation, the years of waiting for a revaluation, what the community calls the RV, has just transitioned into a tangible, volatile, and incredibly dynamic global trading event. The whispers in the back channels of global finance have become a roar on the main stage. So, what does this actually mean beyond the shocking headline? It means that for the first time, the value of the Iraqi Dinar and the Vietnamese Dong is being set not just by their respective central banks or local economic conditions, but by the entire world. It is a baptism by fire into the brutal, honest, and relentless arena of global supply and demand. Every hedge fund, every currency trader, every international bank, and every retail investor with a trading account now has a direct line to influence and determine the trajectory of these currencies. This introduction was not a gentle one. The initial charts show volatility that is nothing short of breathtaking, with spikes and dips that represent billions of dollars changing hands in mere minutes. This volatility is the sound of the market searching for a true price, a consensus on what these nations and their economies are truly worth on the world stage after being largely isolated for so long. The confidence this move signals from the governments of Iraq and Vietnam cannot be overstated. This is the ultimate show of faith in their own economic stability, their political progress, and their future growth prospects. They are essentially throwing open their doors to the world and saying, "Here we are. Judge us. Invest in us. Trade with us." For Iraq, this is a powerful statement moving beyond the shadow of conflict and oil dependency, aiming to be seen as a diversified, emerging economy. For Vietnam, it is a formal acknowledgement of its staggering manufacturing boom, its technological ascent, and its rising middle class. This is their coming out party, and the entire global financial community has received an invitation. The implications for you, the investor who saw the potential early, are profound. The static, controlled exchange rate you have been used to is gone. We are now in the realm of real-time price discovery. So, let's dive into the immediate fallout and what the early data is screaming at us. The initial reaction from the Forex market has been a mixture of frantic speculation and strategic positioning. Major financial institutions, caught somewhat off guard by the suddenness of this launch, are now scrambling to establish their initial positions. We are seeing what analysts are calling a confidence bubble in the very first hours of trading. There is a massive influx of buy orders, not just from the long-term Dinar and Dong holders who are finally able to act, but from algorithmic traders and speculative funds looking to capitalize on the historic volatility. This has created an initial upward pressure on the exchange rates that is, frankly, artificial in the sense that it is driven by the event itself rather than pure economic data. However, beneath that algorithmic frenzy, the foundational reasons for a strong and sustained revaluation are becoming clearer by the minute. Let's talk about Iraq first. The key to understanding the potential of the Iraqi dinar now lies in its transition from a petrocurrency to something much more. Yes, oil reserves are the bedrock, but the real story is the nation's aggressive infrastructure development, its slow but steady political consolidation, and its strategic partnerships with both Eastern and Western powers. They are no longer a purely war-torn economy, they are a rebuilding economy with immense natural resource wealth. The opening on Forex is the lever that will allow that intrinsic value to be properly reflected in the currency's price. The old official rate was a cage, the free market is the open sky. Now, for the Vietnamese Dong. Vietnam has been an economic tiger for years, but its currency has been held back by capital controls and a focus on export stability. This move signals a monumental shift in policy. Vietnam is now confident enough in its economic engine, its world-class manufacturing, its booming tech sector, its incredibly young and dynamic workforce, to let its currency float and find its true power. Early analysis from firms in Singapore and London points to a recognition of this underlying strength. They are not just speculating on volatility, they are making long-term bets on the Vietnamese economic miracle. The Dinar RV is no longer a mythical event, it is a live process unfolding on trading screens. The rate you see today will not be the rate you see tomorrow, or next week. This is a marathon, not a sprint. We are witnessing the first, wobbly steps of two economic giants finally standing up to their full height on the global stage. The de-dollarization trend sweeping the world also plays a crucial role here. As nations look for alternatives to the US dollar for international trade and reserves, viable, strong currencies from growing economies like Iraq and Vietnam become incredibly attractive. They represent a diversification away from traditional Western economic hegemony. This isn't just about individual wealth, this is about a fundamental reordering of global financial power structures. Your investment in these currencies is now directly tied to this macroeconomic revolution. The data flow is immense, order book depth, volume spikes, institutional buy-sell ratios, and correlation with oil prices and other Asian currencies are all painting a complex, real-time picture of their newfound status. Now, what does all this mean for your next move and for the stability of the entire global currency system? The inclusion of the Iraqi Dinar and Vietnamese Dong is more than just adding two new tickers to a list, it is a direct challenge to the established order. The euro, the yen, the British pound, they now have new, hungry competitors for international investment flows. This will inevitably create ripples across all emerging market currencies and could potentially force a reassessment of risk and value across the board. For you, the person who has been holding these currencies through years of uncertainty, this is the moment your patience is tested in an entirely new way. The temptation to sell on the first significant spike will be overwhelming for many. The fear of a sudden crash will be paralyzing for others. This is where strategy must override emotion. The key is to understand that the initial wild fluctuations are not the true measure of long-term value. They are the market's chaotic first impression. The real trajectory will be established over the coming weeks and months as the initial speculative frenzy dies down and longer-term, fundamental investors, pension funds, sovereign wealth funds, and multinational corporations begin to establish their strategic positions based on economic data, GDP growth projections, and political stability. This is when we will see a more sustainable trend emerge. Your investment is no longer a static asset waiting for a single event, it is now a dynamic, living investment that requires attention and understanding of market forces. You need to be watching not just the IQD/USD or VND/USD pair, but also global oil prices, statements from the Federal Reserve, and geopolitical developments in the Middle East and Southeast Asia. Your world of analysis just got exponentially larger and more complex. This is also a moment of unprecedented opportunity beyond mere currency speculation. A stronger dinar and a stronger dong mean these nations have increased purchasing power on the world stage. This translates to massive infrastructure projects, a consumer boom as domestic populations become wealthier, and a golden opportunity for foreign direct investment in their stock markets, real estate, and local businesses. The currency revaluation is merely the key that unlocks the door to the real wealth-building opportunities within these burgeoning economies. Think of it as the starting pistol for a new era of economic growth for Iraq and Vietnam, and you have a front-row seat. The global currency shock is real, and its aftershocks will be felt for years to come. It democratizes currency trading, offering a new avenue for diversification away from traditional assets. It represents a bold step towards a more multipolar financial world, one where economic power is more distributed. This is history in the making, and you are not just an observer. If you are holding these currencies, you are an active participant. The narrative has permanently changed. The question is no longer if, but how high and how sustainable the journey will be. The screens are live, the world is watching, and the future of these two economic powerhouses is now being written in real time on the digital tickers of the global forex market. But before you go, this story is evolving by the second. The information in this video is your crucial foundation, but the real power lies in staying ahead of the curve. The market doesn't sleep, and neither should your strategy. I need you to take action right now. First, hit that subscribe button and ring the notification bell because we will be breaking down the live charts, the latest analyst reports, and the hidden signals the institutions are watching in our upcoming, real-time follow-up videos. This is a developing story, and you need to be on the front lines with us. Second, I want you to go down to the comments section and tell me what you're seeing. Are you holding? Are you trading? What are your predictions for the rate by the end of the week? This is now a community of pioneers navigating this new territory together, and your insight is invaluable. Share your thoughts, your questions, your analysis. Let's build the most informed community on this topic, right here. So, subscribe, comment, and let's continue this conversation. The game has just begun.